What's up everyone, welcome back to another episode of the Idiot Investor Guide with your host Guy Davidson. Today what I'm going to do is take you through Hatch and Sharesies, specifically looking at ETF investment and which one is better in my humble opinion. I've spent a lot of time researching this subject. It was something that I really was interested to know where I should be investing my money in with ETFs. I use Sharesies and Hatch. Sharesies for New Zealand market, Hatch for the US market. So where to invest money for the ETFs was something I really wanted to understand. For those of you guys that don't know, ETF is an exchange traded fund. I've got that wrong in a few videos. I said electronically traded funds, so we're all learning here. So exchange traded funds is basically a grouping of different stocks all in one fund. The most common being the S&P 500, which is the top 500 US companies at any given time. The percentage weighting might be different because there's different fund managers. So you can have Vanguard, or you can have iShares, which is BlackRock, Spider. So there's a whole bunch of different options for the same ETF essentially. So if you want to invest in the top 500 US companies, you don't need to just go to one fund. There's lots of different options there. They should all relatively do the same thing. But it's up to you personally which one you want to invest in. If you want me to dive a little bit deeper into ETFs, I can do that in another video. Just leave a comment and let me know. But right now what we'll do is go through and I'll show you this resource that I found. It's actually from Money King NZ. So that's a blog and they've got heaps of good write-ups and resources. So full credit goes to Money King NZ. I've just made a few adaptations with the recent change in Hatch fees. As I said, you can see at the top there, all credit for the spreadsheet goes to Money King NZ. What I did is I touched up a few of the calculations because Hatch recently changed their fee structure to be $3 for up to 300 shares and then a cent for every share above and beyond that. So, and that's all US dollars, by the way. What it used to be was $3 for anything under a single share and then $8 for anything above that. So it's actually a massive change and it's made a huge difference to the cost structure and the fees of investing through Hatch, which is awesome. And they say that it's not the first time they've done it and probably won't be the last time. So look out to see if they do in fact lower their fees again in the not so distant future. When speaking about ETFs specifically, important to know that at a high level, Hatch charges a transaction fee, which is the same $3 up to 300 shares and then a cent for every share above that. But they go more directly into a lot of these funds. So the management fee is actually smaller. Sharesies, on the other hand, don't charge a transaction fee. So you can be investing as frequently as you like and there's no fee to invest in the fund. However, they do have a higher management fee because Sharesies is investing through companies like AMP or Smart Shares, which are managed funds that invest then into some of these funds that you can go directly to through Hatch. What this spreadsheet is basically doing is taking all of those calculations into consideration, including exchange rates and transaction fees and management fees, and then it breaks down at the bottom of the table which platform or the different costs for the platforms. It doesn't suggest which one to use. You have to come to that conclusion yourself, but it basically just says this is the fees for these different platforms based on how you're wanting to invest into ETFs. So what I'll do is I'll just take you through a quick example of one that I've put together, and just so you can see how it all works. And then if you have any questions on how to use this spreadsheet properly, you can leave a comment below and I'll be happy to help you out. There are instructions in there that Money King NZ has put in. So yeah, big shout out to Money King. This has been a really useful resource for me to find out where to invest ETFs based on my investment plan, because I was looking for a long time online and it took a while to find something that really broke it down in this detail, which is exactly what I wanted. So that's why I wanted to share it with you. So I'll go through the top section first. So what you're looking at here is basically the ETFs. So you could add ETFs in here. My personal plan is to not have more than 5 ETFs at any one time. So this was perfect for me. you can be adding them in. It might play around with the calculations. So if you do want to add some and you're worried you'll break the calculations, just let me know and I can create a spreadsheet for you with the right amount of lines so the calculations still work. And so what I've got here is basically 5 pretty common ETFs. I am invested in 3 out of these 5. Just for argument's sake and for going through this example, I've taken what's in my Sharesies portfolio percentage-wise so that we can just run through as if I was invested in these 5 ETFs. So going from left to right, it's basically the name of the ETF, the fee percentage charged, so this is the management fee, and the allocation percentage. So the allocation percentage is how much of your investment is allocated to each of these funds, or how much do you plan to allocate to each of these funds. So this can be a forecasting thing as well. It doesn't have to be you already have this. It could be, okay, what's my plan? What do I want to do? And then put that in here and just see, okay, what's the fee structure going to look like on both platforms. So then it does the same for Hatch, and you can see already the fee is much lower. So I've grabbed these fees from the 2 platforms. So Sharesies will tell you the management fee. If you're looking in actually one of the ETFs and scroll down to the bottom, it has the fees in there. Hatch, you just have to click through to see the market info when you're in any ETF, and it will take you to a page that tells you the fees there as well. So you can actually see up the top the weighted average of the 2 in terms of management fees. So you can see off the bat, Sharesies has a much higher management fee than Hatch, and it looks significant, and it is significant, but it's only going to make a massive difference if you have a lot of money invested, because 0.5% is really not a big amount of money, and the transaction fee will be a lot more than what that is over time until you have a large amount of money invested. They're called slightly different things in the 2 platforms as well, so you may need to do a bit of digging. So the US Large Growth Fund in Sharesies, for example, is invested in a Smart Shares fund that then invests in the Vanguard ETF. So you need to do a little bit of research to make sure you're doing like-for-like comparisons. These ones, though, are already set up to go. So if you are investing in any of these, then that's perfect. You don't have to put an allocation to any line, by the way. You could say 50% here, 50% here, for example. And as long as it totals 100%, that'll be fine. The calculations will work. Over on the right-hand side, this is looking at the brokerage fees for Hatch. So this is the part that I had to tidy up because it used to scale up to $8 US. So basically this is just looking at how many shares that you're buying and timesing that by the brokerage fee. So $3 up to 300 shares and then 1 cent for every share above that. Over on the left-hand side again here with the fees. So this is looking at what fees are included on each of the platforms. So Sharesies has their annual fee, which is the subscription fee. So $30 is just considering if you have, $3,000, I think it is. So you can input whatever makes sense for you there, because it may be that you're paying $1.50 a month, or if you're up to $3 a month, I'd suggest paying the $30 annual fee because you'll save $6. Hatch fee is an ongoing fee for paying for them sorting your tax out. So you pay 50 cents US a year and they'll sort all of your tax out for you on the US side of things. So that's what the ongoing Hatch fee is. They don't charge a subscription fee like Sharesies does. The foreign exchange fees, so obviously Sharesies is New Zealand based and investing in New Zealand companies, so there's no exchange fee there. There is an exchange fee for Hatch because you're changing into US dollars. It's a very reasonable fee, but it's something to consider. There's no brokerage fee for Sharesies, as I just said, and the brokerage fee under 300 shares or up to 300 shares is $3 through Hatch, and then above 300 shares is 1 cent per share. So again, I had to tidy this up. If things change again and you're not comfortable changing the spreadsheet yourself, just feel free to reach out to me and I can help you make sure the calculations still make sense. So back over on the right hand side, there's an exchange rate section here. You can keep this up to date based on the current exchange rate. I updated it recently, so it should be more or less accurate, but I would suggest going and making sure this is correct. If you actually go into Hatch, they have outlined their own exchange rates, so that'll probably be more accurate than what's on Google. I think it's slightly different, but it won't be a huge difference. So if you can't be bothered, Google should be just fine. It's a sort of overarching idea of what's going to be the best cost-wise investment. And then looking at Hatch's total fees. So this is splitting out everything. So it's converting New Zealand to US dollars, looking at how big your portfolio is after you've done your initial trade, so you've paid your transaction fee. Then it's converting your investment to US dollars, and then it's your investment after your brokerage fee, and then it's looking at the total amount invested, and then it's looking at the management fees and the annual fees, and then it's looking at your final portfolio and converting it back to New Zealand. So kind of confusing, there's a lot going on there, but basically what it's doing is all the hard work for you. So you just plug in up the top how much percentage you're putting into each fund, and all you have to do is literally this top part here and this part here, and all the rest of this is calculating it for you. So I'm just taking you through it to try and help you understand it, but realistically it doesn't matter. If you do need to touch it up, if anything changes with Hatch, like I said, let me know, I'll help you fix it up. But all you have to look at is this section here and this section here, and that's outlined in these steps here. So Money King's already made that abundantly clear. So the final stage, and the part that you'll want to play with the most, is this section on the left. So starting balance is how much you're initially going to have invested or initially invest, how many years you forecast to invest for without taking your money out, how many regular investments you're making, is it fortnightly, is it weekly, is it monthly, is it quarterly, and how much you're investing every time. So, if it's not going to be the same, look for a rough average of what you think you'd invest over the year for those different time periods. So again, it's not looking at a perfect cost solution, it's just saying this is roughly how I plan to invest in ETFs. What would the fees be based on that? And then you can start to play with the numbers. So let's go through an example. So I've put my actual percentage weightings that I have in my Sharesies portfolio, and so I've just copied that to Hatch. I don't actually have the same allocation in Hatch, but I want to see a like-for-like comparison. So if I were to invest in Sharesies and Hatch in the exact same way into the exact same ETFs, what would the cost structure be? Which one is more beneficial for me to invest in? So if I put 1,000 in as my starting balance, so I'm investing $1,000 to begin with, and say I plan to invest for 20 years, and I'm going to be investing fortnightly, $500. You'd end up with the same balance of $241,000 invested. And this is important to note, this is how much is invested yourself. You can see on the main limitations here, it doesn't take into account how much you're gaining on your ETFs over time. So it's not looking at the growth value of your portfolio, which would change the management fee of your portfolio, because that's based off of your whole portfolio, not just what you've invested, whereas the transaction fee is purely on what you've invested. So there is that little caveat, that little bit of information that you need to sort of think about as well. But again, this is just a high level, what would make the most sense, where should I invest my money, and giving you an idea of what the different fee structures would be. So if we were looking at $1,000 over 20 years, fortnightly $500, then you're looking at total fees of almost double through Hatch. So you're looking at $23,407 in Hatch versus $12,663 in Sharesies. So that would be a no-brainer to me. I'd say Sharesies every day of the week, because you're having an extra $600 essentially per year, or an extra 12 grand over 20 years that would be being reinvested somewhere and making compound interest. So that would make a massive difference. Now, for example, let's say we want to invest less frequently. So maybe we're only going to be investing once a month. You can see instantly there's quite a big change there. So it's brought all the fees down significantly, first of all. It's almost halved all the fees because you're doing less transactions, but it's also because I've put 500 there still. So if I change that to 1,000 to make it the same amount of money invested, then you're looking at slightly different fees here, and you're actually seeing Hatch starting to come down a bit in its fees. It's no longer double. It's not even close to double anymore, actually. So it's 5,000 more still, so significantly more, and still, in my mind, I would say Sharesies for this one. And let's say we bring that back to, we're only going to invest every 2 months. So 6,000, and we might do $2,000 investments. Now you're starting to see them get closer as well. So this can start to tell you, if you're investing less frequently, Hatch starts to become a more viable option, because the main thing with Hatch is the transaction fee. So the less transactions you're doing, the less you're paying through Hatch. And they have lower management fees. So the money sitting there is getting charged less, or you're getting charged less for the money sitting there. So then say we wanted to go and invest for, say, 30 years. Now you're starting to see that Hatch is actually cheaper than Sharesies. And this will be in large part due to the fact that you have more money sitting there for a longer period of time. So the management fee actually starts to become more significant than the transaction fee, especially at every 2 months. So then if we wanted to invest, every month again over 30 years, you see that Hatch is still more beneficial because we're investing large amounts of money as well. So if we invested every month and only invested $100, you see Hatch becomes much more expensive again. So the transaction fee from Sharesies of doing small regular investments is much lower than Hatch's transaction fee, and you would have less money sitting there over the 30 years, only 37,000. I say only 37,000 compared to the 300,000 odd number we had before. So you see that if you have a smaller portfolio, smaller amount of money invested, and you're doing smaller investments, smaller regular investments, or even irregular investments, because Sharesies charges a percentage on your investment, doesn't charge a flat fee, then you will be paying less for a smaller investment. So you can see by making it smaller investments of $100, it's actually significantly changing to be in the favor of Sharesies again, because you've got less money in there, so the management fee isn't making as much of an impact, and you're doing smaller investments. So Sharesies is paying a percentage every time you invest, 0.05%, whereas you're paying a flat fee through Hatch. So if you're doing smaller investments, the flat fee of Hatch will be more. I think it's up to $1,000 in Sharesies in one go will equal that $3 US flat fee in Hatch. So that's all I wanted to take you through today. I hope this is helpful. This was something that I took a long time to find, and I found this resource really, really helpful. I'm going to be personally investing in Sharesies for my ETFs for the short to medium term, because I think I'll be doing more regular investments, so having a lower transaction fee is a big win. And also the management fee, although it's higher, I don't have enough invested for it to make a huge difference, and I don't think I will until a long time away. So if I do start to accumulate quite a lot of money in my ETFs, and I'm talking in the sort of 20,000-30,000 range, then and only then will I move it to Hatch. This is just a comparison of Hatch versus Sharesies. There's a lot of other options out there. Smart Shares, for example, if you're going to be making regular automatic payments and just letting it sit back and letting it grow, they only charge $30 up front, and then it's free to keep auto investing, and you have to do, I think, $50 or more. So if you want me to deep dive into that comparison, leave a comment, let me know, and I can do that as well. I'm not a financial advisor, so please just take this with a grain of salt. I'll leave a link to this spreadsheet below so that you can have access to it. I'll also leave a link to Money King NZ's website. It's also in the spreadsheet. Highly suggest checking their page out. It is really good. Heaps of resources, heaps of educational posts, and lots of comparisons as well between different trading platforms. So highly recommend checking that out. If you like the video, subscribe, hit the notification bell, and leave a comment about what you're planning to do with your ETF investment. Any questions, feel free to ask. More than happy to help anyone out with the spreadsheet that's having trouble, because there is a lot going on. So Feel free to ask any questions in the comments and I'll be sure to get back to you. Until next time, guys, we'll catch you on the channel.